Hey friends, Scott Smith, the Smith team at Keller Williams. Wanted to share with you a mid-year update for 2023 as we are transitioning from the first half of the year into the second half of the year. There's always an interesting dynamic that goes along with that as we come out of the strong spring market into more of a stabilized summer and into the fall market conditions. There's 5 different areas that we look at. I wanted to just share with you some of those key indicators that we look at from a national standpoint and obviously from a local standpoint. The key things that we look at are interest rates, we look at prices, we look at supply, we look at demand, and just kind of the vibe within the home ownership and the real estate market, what we're seeing ahead of us, and taking some of the information that we learned looking backwards and kind of what we can predict looking ahead. So I'll share with you some of the great insights that we've got from a couple different resources and hope you enjoy. Thanks. All right, here we go. So what I've got for you are some of the 5 things that we'll actually take a closer look at when it comes to key indicators within the real estate market. So obviously the hot topic recently has been mortgage rates. I'll touch on a little bit about supply and inventory trends. Days on market is a good indicator of kind of where the market is trending. Supply and demand, obviously demand is a big indicator of kind of how many people are out there in the marketplace, and we look at showing activity with that. And then the pricing trends. So take a close look at what we've got going here, and I'll just share with you some of those insights. So this is actually a chart that we have got from the Mortgage Bankers Association, and over the years, the 30-year mortgage rates move right in line with the 10-year Treasury yield. So if you want to kind of see what's happening with mortgage rates, just pull up the 10-year Treasury yield. And then average spread at 1.72, that number is kind of the yield spread that banks will realize when they sell a mortgage to the Treasury. So typically that spread is 1.72, but what we've actually seen in the last couple of years as mortgage rates have trended up is we've seen that yield spread actually almost double. And so we're seeing banks making more money because they feel like they're taking on more risk, but they're passing that risk, of course, along to the consumers. So the next thing that we take a look at with that is what are some of the projections for mortgage rates. So right now, mortgage rates, we're sitting kind of in the mid-6s. We saw a little blip upwards, touching 7 a couple of weeks ago, but now they're settling back down. I think there's a lot of uncertainty with the debt ceiling. And so what the resources that we use, we're looking at a kind of a blended average in some of those predictions between Fannie Mae, the Mortgage Bankers Association, NAR, which is the National Association of Realtors, and then the average of all 3. And kind of what they're predicting is interest rates definitely trending downwards and stabilizing. Historically speaking, we know that interest rates have been considerably less, and we're in a good spot now where we're stabilizing. We have some of that uncertainty out of the way. The next point that I want to talk about is where we look at from year-over-year inventory levels. And this is a good thing. We want to see inventory increasing because there's a lot more stability with that in the marketplace. And then also the buyers aren't going to be as rushed. And so we're getting back to more of a normalized real estate market. And I'll show you some of the days on market trends. But we're seeing those the inventory start to increase. We're still definitely short. National Association of Realtors tells us that a balanced real estate market is anywhere from 4 to 5 months of inventory. And still in the Twin Cities, we're seeing inventory in just under 2 months. So it's healthier than it was, but definitely could see some more. Doesn't feel very good. I always relate it to coming back from Duluth on 35. You're going well over the speed limit, and then all of a sudden you hit the Twin Cities, and it slows down to about 60 miles an hour. It feels like you're standing still. So it's all a matter of perspective when it comes to that. So here's the local rate from the Minneapolis Association of Realtors. You can find this right online, where we were in May of 2021, 22, and 2023. And June's numbers will be out in a couple of weeks, but I anticipate that they're going to hold true. So if you look on the right side of the screen here, you can see some of those increases are 30, 40%, but it's all relative because we went from a month and a half of inventory to 1.8 months of inventory. From a buyer's perspective, it's definitely healthier. From a seller's perspective, it feels awkward that we don't have as much activity as we once did. But at the same time, it's definitely going to be more of a stable market conditions. So this is a chart that I like to show our sellers when we're meeting with them, talking about where the market is trending. So the thin gray line is actually last year's snapshot at this time of inventory homes for sale. And then the darker blue line is the one that we're looking at for this year. So more of a stable increase with the inventory of homes for sale. So we look at the absorption rate with that. And the absorption rate is if we put 5 houses on the market, how long does it take for those 5 homes to sell? Is it a matter of days, weeks, or months? And we're certainly in a good spot right now where homes are selling on average in less than a month or right around a month. But certainly does make a difference having them priced correctly and also in good condition. It's not the kind of market that we were in 2021 and early 22 when you can just throw it on the market and you get 15 offers on it. Definitely not the same. So this is actually the market, days on market. So the headline that you would hear on the evening news or read it online is that inventory, the days on market rather, has increased 65% compared to where it was last year. Well, yeah, we've gone up from 23 days to 38 days. And that is a function of the market kind of stabilizing again, but also maybe the pricing is being more of a moving target. So we've got a lot of newer realtors. They just don't understand where we are in today's market conditions. Pending sales, this is a great indicator that we look at. This is the most accurate when it comes to what is happening today. So you can see the ups and the downs year in and year out. And what those peaks and valleys show are actually right around some of those different holiday weekends. So you might have a spring break or Easter weekend. You might have a Memorial weekend in there. We always see a little drop off over like the 4th of July, Labor Day weekend, and then as we get into Thanksgiving and the Christmas season. So we see some of those ups and downs, but in general, we've got a good long-term trend, and we're seeing things go up again. Part of that is that we've, again, seen a little bit more smart pricing on properties, but there's also kind of that uncertainty within the market and mortgage rates. So that has definitely made a difference for the pending sales. This is a great chart. What I want to show, we're talking about house values across the country. And real estate is all local, but mortgage rates are actually national. So we see some changes on a local basis, but for the most part, those mortgage rates are local. If you hear that some of those national numbers as far as what is happening with prices, nationally, we've seen more West Coast prices drop. I think they were overinflated. Well, actually on the East Coast and the Midwest, we've actually seen prices either stable or trending upwards. So this chart actually shows 3 different resources: Case-Shiller, which is kind of a clearinghouse for real estate statistics, FHFA, and CoreLogic. 3 different research outfits that will provide data. And you can see where we did see a dip last year, July, August, September, October. That was really because that's when we saw the mortgage rates really spike up from around 4% to where they peaked out in September, or actually October, at just over 7%. And there's a lot of buyers that said, we're just going to wait until mortgage rates come down. And they have come down, but a lot of people just don't realize that. So the percent change in house values, this is really taking a close look at month over month, seasonally adjusted. If we looked at average sale price, we're actually seeing more activity in the starter price ranges than we have in the upper bracket price ranges. Median sale price in the Twin Cities, probably a headline that we'll see is that it's actually gone down for the first time in a number of years. But looking at this, kind of where we are in compared to 2021, we're still up almost $15,000 over the last 24 months, which is healthy if you're a seller. But how does it feel for you as a buyer? Because we've seen prices go up and mortgage rates go up, so that affordability has certainly changed with that. The one thing I wanted to share with you is on this is actually a snapshot of the median sale price in the Twin Cities. Obviously, it's a long-term trend, but the point I wanted to illustrate with this is how it actually fluctuates on a yearly basis, on a monthly basis, where we might see sometimes certain times of the year, we might see prices that are stronger in the upper brackets, and other times we might see prices stronger in the lower brackets, which would certainly pull that median sales price down. But long-term wise, it certainly is always heading in the right direction. So a couple other things I want to share with you about what it means to own a home. So we look at some of the financial benefits of home ownership, obviously building equity, long-term savings, building wealth, having a strong credit history, and then control of your own expenses. We've talked to people that are coming out of a rental situation, and part of it that really prompts them to make a move is that their landlord has increased their rent. And when you own a home, you get a 30-year fixed rate mortgage. Those mortgage, your monthly payment, aside from your property taxes and maybe your insurance, that's going to be fixed for over those 30 years. So you can plan accordingly. You can budget smartly. And so that's definitely a case to be made for rents. And I can show you some great charts about how rent has actually skyrocketed. I think in the last 5 years, the median rent has increased over 50% across the country. So that's why we want to get more of those first-time buyers into homes. So the next thing I want to share about tax benefits. It kind of relates to the financial, but mortgage interest tax deduction, if you qualify for that, a property tax deduction, imputed rent. So if you were paying rent, you're not being able to take advantage of those tax deductions. And also some of the best tax advantages are when you profit from the sale of your home. You don't have to roll all that into the next home. There's some huge tax deductions that you don't have to pay any capital gains on. $250,000 if you've owned your home as a single person over the last 5 years as your primary residence. $500,000 if you are married and filing jointly. You can exclude up to $500,000 in gain and don't have to roll it into a new place. So some awesome tax advantages with that. Social benefits, the things that why do we want to own a home? Civic participation. Hey, we want to establish roots in the community. Having financial education and health benefits. Being stable within a home. Having your own privacy, especially coming out of COVID, we learned that our home was more than just a place to lay your head at night. It's the foundation for families, foundation for owning your home, and it also turned into home offices. It was our rec space, all the above. Making some property improvements, those are all beneficial things. So the bottom line, those 5 different points that I touched on here is a lot of people are saying, should we wait to make a move? Right now, we're anticipating that mortgage rates are going to be dropping, but prices are still going to be increasing. So there's an old adage about real estate. Don't wait to buy real estate, buy real estate and wait. So if it's something you have a life change where you want to be making a move, certainly reach out to us, and we'd be more than happy to continue the conversation and how we can help you with that. 651-777-3434. Take care.